hamburger, the plus button under vendors, and then pay bills. Okay, so notice that this form is just like all the other forms, except that we can actually pay multiple at the same time, right? I can check multiple of these, so I might want to pay like all of the overdue items, which would be, $606. So what would be the transaction if I was to record all of these? Well, it's a pay bill form, which is a type of check form. Therefore, it's going to decrease the checking account by $606.44. The other side is going to be going to then the accounts payable, decreasing the accounts payable by the same amount, but also tracking the subledger, paying each of these different vendors, which means that these are going to have to be recorded with 3 different transactions in essence in the subledgers. So we're making, in essence, 3 different pay bill forms kind of at the same time within this window, because I can't pay all of these 3 vendors with one transaction, whether it be electronic or a check type of transaction. So that's the general idea. So let's say I pay like this one, and then the Verizon one here. And let's say I make the payment on like, I don't know, the 7th. And then I'm going to go down here and say, I'm going to save and close. Let's save and close it. Oh, wait a sec. I didn't pick a payment account. So the payment accounts are going to be the checking account, the savings account. We could also make the payment account a Visa card and Master, meaning a credit card types of accounts. Those are all financial institution accounts. They're basically the same transaction, but a Visa card or credit card, instead of decreasing the asset of a checking account, increases the liability account. All right, then if we have the check numbers that we're going to be entering, if you're physically using the checks, which most people don't do as much these days because it's going to be an electronic transfer, you'd have to buy the actual checks because you still need the physical checks that are printed in essence by the financial institution, put them in the printer, and then start with the check number that's on the first check, and then you can print all the checks, or you can handwrite the checks and still enter them and then mirror the checks that you're entering in the system here so that you have the check numbers. Because if you're physically sending out the checks, you want to be able to track them so that you can have your bank reconciliation and see if the check cleared or not. A lot of people won't be physically writing checks, so you might not, in essence, have a check number. So I'm going to put in this field just EP for an electronic payment. And then if you're going to print the checks later, if you were printing the checks, you could check that off and then print them basically later so that you could still record the transactions and then print them at a later time so you can keep doing your bookkeeping process. But I'm going to keep it here, and then once again, I'll hit the drop down and say that I'm going to save and close it. And then it's going to record those 3 transactions. Notice what's left here from the unpaid transactions are the ones that I didn't check off. Now that I'm back in the bills, the paid items are now going to show, for example, the Verizon that has now been paid. If I go into the balance sheet, I can refresh, run the report to refresh it. I can go into the accounts payable for 2025. And you'll notice, even though I paid them at one time, it's recording 3 different transactions here. So I'm going to then go in. So I'm going to go into any one of these. And if I go into it, I see the same form, the bill payment form, but I don't see all 3 of them that I checked off at one time. I only see one at a time because they would be representing 3 different transactions, whether they'd be done electronically with a wire transfer or by physical check. So there's going to be our payment. I can close that out. Notice that what I have within the accounts payable, bills go up, and then the bill payment form is going to decrease it. That's all you're going to see in the detail of the accounts payable account. Noting also that this form, they also label it as a check because it is a type of check form. The most generic form of the thing that decreases the cash account is a check. Now, an expense form for QuickBooks just means it's a check without a check number because it's an electronic transfer, and a bill payment form means that it's a check, but it's not going to be a check for anything other than decreasing the accounts payable. Therefore, if I look up the check, for example, if I go back up top and I go into my cash account, the other side's in the checking account, and I say, let's check that out. Let's check out the checking. So notice I have these check forms. I can't tell what I paid for. Now, the names might tell me, like Verizon, I'm going to say, well, I paid for the telephone bill, obviously. But notice the account over here doesn't say telephone bill. It says accounts payable. So that's why it's useful to say, okay, wait, this is a check that was for a bill payment, which means that if I want to know the account that was impacted, and I can't tell by the name Verizon, I would have to go into this form, or one way I can do is go into it here, and then connect to the bill. The bill is the form that tells me where I actually recorded it to, which is the account of telephone expense under the utilities, which I didn't record this time. I recorded it when I entered the bill. All right, let's close this back out. Let's go back up top. So notice that there was no impact on, if I go to the income statement, we still just have the $75 there. That was there when we entered the bill. The actual payment didn't impact the income statement, which means we're on an accrual basis. We impacted the income statement when we entered the bill closer to the time we consumed the expense, as opposed to when we paid the bill, which was at a later point in time. Okay, if I go back to the first tab, we can check this out. If I look at the expenses on the first tab, I can now say the bills. If I filter the bills and I look at the status of open bills, we can see that these are the only ones that are open. If I look at the bills that are that have been paid, we should see the bills that we just paid off now, including the Verizon bill. And I can sort by the pay bill forms if I so choose. And there's the 3 bills that we paid. I can go into the bills area, which is only going to show the bills side of things. And that's where we have the unpaid and the paid. So that moved out of the unpaid to the paid. I can sort by vendor. And I can now look at the open bills, sorting by open bills. I just unopened them. Sorting by this one. So now these are the only 3 that are left. Or I can look at the past 30 days or whatever. And there's our Verizon here with the bill that has recently been paid. If I go into that, imagining Verizon calls us up and says, hey, you haven't paid us or something. I go into here and say, well, it looks like I've paid you because here's the actual bill and there's the payment. If I go into this particular bill, it says it's been paid. And then, of course, if they still say it hasn't been paid, I go into my actual bank account and say, hey, look, I see the $75 has been cashed. It's gone out of my bank account, and therefore you should have been paid with it. It should have gone into your bank accounts. There must be some other side of the transaction that has happened. And that's why it's important, if we use actual physical checks, we have this timing difference. So if there's a timing difference, I would have paid it, but I have the added check of saying, did that check clear the bank? Did it actually go out of my bank account? That's when we do the bank reconciliation, which we'll talk about in a whole nother section or course. All right, so that's the general process with the bills and the pay bills.